together. So impact. We have just over 20 minutes for this session. The intention is for it to be fast flowing and hard talk style. So the panelists were warned that we're going to ask some very challenging questions. Indeed, all of you are going to ask some very challenging questions. To frame the discussions, join this seat as well. STG Tarleton. So we've just discussed how capital is being deployed. We've looked at the transition, where it's working, and indeed where it's not. This session aims to take one step further, because even where capital is flowing, as the data drop is showing, a more fundamental question always remains: are we actually delivering the impact that we want to see? Or are we just getting better at measuring and reporting it? Over the past decade, the term impact, in inverted commas, has moved from niche to mainstream. We've got dedicated impact funds, we've had ESG integration elements, sustainability-linked instruments, and increasingly sophisticated frameworks and metrics. That growth also comes at a level of scrutiny. Now, we're asking more, what counts as real impact? How do we distinguish between the outcomes and the narrative and the virtue signaling that happens around that? And are we actually being very honest about the trade-offs between impact and returns? At the same time, there are genuine successes. Capital is reaching underserved markets, new frameworks, improving accountability. I think Sasha touched on some of them earlier. And investors are pushing beyond the traditional models. So this session is deliberately balanced between not just is the impact working, but where is it working and where are we overstating it? Because ultimately, if we cannot demonstrate the real world outcomes, credibility of the entire system, as was discussed earlier, is at risk. So if I can kick off, first of all, with the panelists, just in terms of your definition of the word impact, because it has evolved, it has taken on more meaning over the last at least decade and a half that I've been following it. So if I can start maybe from my far right, Lemmy.
Thanks. First, I just want to say thanks for inviting me to this event. It's been really interesting, very good international conversations. My definition for impacts, having worked in this space for many years, but not in the finance area, is basically where there's some kind of transformational change, in summary. So basically, in the development world, we talk about outcomes and outputs, but usually outputs are things that are tangible. Outcomes is where there's some kind of a change that you can't see, but impact is a level above that. So basically, you're saying, okay, what happened, what behaviors actually changed beyond the intervention? And sometimes people get very impatient. It can take 5 to 10 years to measure real impact. Let me give you one example. So one of the things I used to do when I worked in the UN, I worked for the International Atomic Energy Agency, using nuclear system technology for development, was also to help countries with food security and developing new crops. So we know it takes 5 to 10 years to develop a new crop. Of course, a lot of government ministers will be impatient with that because it's going to outlast them. But the idea is, what are you creating the impact for? What are the metrics that you want to see? Is it for your benefit or is it for the community's benefit?
Thank you. And I have to say, this is the first time I think we have a Nobel laureate on our panel, so your work at IEA was very well recognized. Andrea, from your side, from HSBC in the capital market sense, how do you define impact?
Sure, thank you. And I also should just clarify, because if people can hear me, but I think it was initially my boss, the head of responsible investment, who, so I'm standing in for her, so I'm actually the head of responsible investing specialist.
So you haven't been promoted, just for clarification. That's an awkward one going back to the office,
yes, isn't it? I've been working in sustainable investing, impact investing before HSBC, where it was very truly a private markets endeavor, particularly in emerging markets. And where I was working was predominantly in impact-oriented funds, where it was a very, I would say, very target, very focused on positive outcomes to particularly underserved communities. And over the last 10 to 15 years, I think we've grown the market so much now that we see impact being a huge asset class area, particularly within listed markets, and predominantly led, I would argue, by fixed income and the green bond markets. So Traditionally, what we've talked about as impact has always been having an intentionality in your investment objective and in your investment process to achieve certain predefined outcomes that either link to helping underserved communities or creating some sort of positive benefit to in any sort of category, whether it be social or environmental. And I think that still is very much true, where you do have to have that intentionality, you do have to have it woven throughout your investment process and to end through a theory of change and KPI ideally to measure. But what I think has actually happened over the last couple years is, especially within listed markets, especially within even arguably equities, which a couple years ago was a big debate, can you do impact in listed equities, is I think asset owners and also asset managers have actually widened the scope a little bit in terms of what they mean by impact, because not everything can be very well measured. Not all companies have the ability to give the disclosures and the KPIs in the exact way you would like them to be, particularly if you're going below some of the investment grade smaller companies. And so what turned into very specific KPIs is much more now about, well, there's a positive benefit, there's a positive contribution. We might not yet call it impact, but we do know that there's a contribution that's being made. And in some ways that term impact has been a little bit more open now. And I would argue that's a trend I'm seeing.
Interesting, definitely seen that evolve, and intentionality being a debate that is always at the heart of impact plus returns first. Amy, from your expertise, now a net at impact investment, but a real leader in this space, how do you define impact today?
Well, firstly, I mean, I agree with Lamina, I agree with Andrew, but frankly, I don't like the term. You know, that might sound a little bit perverse coming from somebody who set up an impact investor. But the whole point of investing, no matter what type or style or asset class you're in, you're creating impact. It's a little bit like calling a restaurant a food restaurant, because you know you're going there to eat food, so why call it a food restaurant? When you're investing, you know you're going to create impact, so why call it impact investing? Largely what we're doing is actually talking about very specialized thematic investing with the types of behaviors alongside it, to Lamina's point, that drive outcomes, and then actually to impact and beyond impact, to value, to the value that's actually created for us. And I understand that as a human race, we have a real need to label everything. But I think in labeling, some of what we have labeled, we've caught ourselves in a trap, and we've made it easy for people to weaponize the narrative against us. Oh, you're the impact investing community, you just do the little niche bits of investing over here, the compromised returns, the private market stuff. You know, oh, you can't have it in the public marketplace. So I agree. I completely agree with what Lamina and Andrew have said in terms of what impact investing is. You can have impact everywhere. Transition finance is impact investing. Ultimately. The question that I'm now sitting with, after 30 odd years, is whether we should call it impact investing at all, which is probably not what you expected me to say, Omar.
It wasn't, so here goes the script. Right? So Amy, surely, like even in the word, I mean, we're told, why do you call yourself Global Ethical Finance Initiative? There's responsible finance, there's sustainable finance, and so on and so forth. So even impact has evolved in its meaning and its understanding. Is that not just inherent in any language?
Absolutely. I mean, what we thought yesterday, is not exempt from change. And Eva, we were talking last night about this, the semantics, the language, and the fact that the language is always iterative, it's always evolving. And given this last couple of years that we've been in, this backlash, which was always going to happen, it's not the first time it's happened, it won't be the last time it's happened. Change can threaten people. But a lot of the language that we're using doesn't resonate with people. They don't understand what we're talking about. And to Joe Public on the street, we're literally talking about their future security, their future safety, their prosperity, how resilient their communities are. So, we've really got to start, I think, challenging ourselves, and we were talking about this last night, challenging ourselves in the language that we are using to ensure that we bring people with us.
Absolutely. Resilience is definitely a term, and all of a sudden that's emerged a lot more. Right, I'm going to ask the audience for questions, so if you can raise your hand, I'm going to go straight to the audience. And then we've got some rounds of questions as well there. Please keep it brief, and I want to try and get a couple of questions at the same time. So if I could get a mic up there, please, and then another one across there.
Thanks very much, really insightful. So I'm Andy Harris from Niche Broking. Our company is a carbon credits asset manager, and I hope one day that we don't exist anymore, because that means we've succeeded rather than us failing. To your point on impacts, we've heard about stewardship. Do you hope that one day your jobs don't exist anymore, you're just investors? And that's how it works.
Great question. One day your job won't exist. Right. Hold that thought. We're going to take that question there, and then I'll split up the question.
I'll just keep talking, here we go. I'm Fiona, I'm with the Institute of Chartered Accountants of Scotland. A lot of what we're talking about today is kind of lives or dies by the quality of data and transparent disclosures, as has already been covered, including things like assurance as well. There's been a lot of change in disclosure standards, and there's becoming more clarity of what we're going to be doing in the UK. A lot of it's being driven by investors. However, it's really investors who are seeking financial returns because the new standards don't particularly cover impacts. I just wondered how you feel about the state of the sustainability reporting, the direction of travel, and what would you like to change?
Great, thank you. Right, first question, Lamine, if I can come to you on that first one. And I don't want to give you the accountancy question. ICAS, by the way, the best institute in the world. I'm still paying my fee. You know?
Yeah. What I wanted to share was basically, obviously I come from a very different background from everybody in this room. However, I think there are some good lessons to be learned. So just going back to the, I know Amy doesn't like the concept of impact. I'm actually kind of designing a framework, which I call it impact framework. So the idea is this like 6 steps. So basically over my career, working about almost 25 years in international development, I was looking basically on my history about how I created impact. And the things that my job at the UN was basically to design, plan, and implement projects. So I was actually judged on how much I deployed in terms of capital. Now, one of the things, actually funny enough, about 2 weeks ago, I actually posted something on LinkedIn, and I was actually applying for some jobs, but every job that I see was always talking about strategy, planning. But the most important thing is not about planning and strategy. We don't need any more plans. We need to start implementing. And my job was based on that. I'm thinking, one of the things I wanted to share here was that maybe people start thinking about their job criteria. They should be judged on how much they actually deploy capital that actually creates effective change. So going back to the impact framework, which I'll share with you briefly, was basically business 6 things. So I stands for intention. So if you want to do something, what is your intention behind it? What's the purpose behind that? The M stands for mastery. Basically, do you have the right skills? Or does your organization have the right skills to do that? The P stands for planning. Have you planned properly? Who has been involved in the plan? If you're looking at impact investments, have you engaged the communities that you're going to work with? The A stands for action. So before we take action, do you have all the right governance in place? The C stands for connection. Again, it goes back. If you're trying to have an impact on different people, whether it's in the work that you're doing, have you connected with the right people who are you actually going to have an impact on? So we talked a lot about investing for the guy on the street. Have you asked them what is it that they really want their money to be invested in? And of course, the last bit, T, is transformation. How have you transformed economies? How have you transformed people's lives? Or perhaps have you transformed your company? But that thing on the last thing, transformation, is the concept of also dignity. We're talking a lot here about beyond profit, beyond just ROIs. What is the transformation that you've actually created?
Yeah, thanks for that, Amy. Eddie, on the accounting question, any thoughts?
I'll try. I think I'll also answer a bit on the data part as well, because they're interlinked a little bit. I would argue that data is always, there can always be better and more data, especially on impact. We have found that once you go outside of, even for some of the standardized types of frameworks, such as the ICMA Green Bond frameworks, you don't always necessarily get reporting data in a format or even in a way that you're necessarily looking to get. Same as similar with other asset classes. If you go outside of the GSS labeled bonds, data can also be more of a challenge because you're not using frameworks that sort of neatly tie everything through use of proceeds. type of security you're financing companies and looking for them to give you impact data. And the moment you start to go into emerging markets, it gets even more challenging. And yet half of the universe will be below investment grade oftentimes. And so that's where there's a huge amount of impact potential to be had. And so what ends up, I would say data is a gap. It's a gap always, I would say, across. It's getting better. We are having data providers that are providing good impact KPIs, although it's not coverage-wise always enough. And in some asset classes, in some regions, we often go and actually build the data through our research, through our engagement with companies. And so in some ways, we actually develop our own proprietary metrics to measure where the data from vendors may not be available or sufficient. So I would say that is a gap still. I would argue that companies are beginning, especially given some of these listed companies where there is a lot of engagement around impact, you are seeing reporting of impact KPIs, but oftentimes we'll have to still go in and engage companies on better disclosures, oftentimes better, more granular metrics. Sometimes you actually have to we go in and do a lot of work, especially on some of the revenue breakdowns between what we would attribute that to be for certain impact outcomes. So it's a lot of manual work to do impact investing still, and I think the more we can encourage reporting, particularly outside of just climate, but also other types of social and environmental metrics in addition, I think the easier it makes it for investors to go and do more impact investing. But to the point we were saying earlier about labels, it's very difficult to get impact labels now with some of the regulations. I mean, we've seen that in the UK. It's not an easy process. They really do challenge us, and that is probably a good thing. But we also have to keep in mind that not everything will have a perfect metric or KPI, and especially the deeper you go into markets and the deeper types of companies you go into where there's a lot of impact to be had. So if we really think about quantum, we also have to think about how do we get comfortable that maybe we don't have always perfect measurements.
Thanks for that. I'm going to go back to the audience for questions, but if you just put your hands up, I'll find you. But before we do, I want you to come back to that very first question, Amy, that was asked.
Do I want to make myself redundant? Yes, I do. I've spent 30 years trying to make myself redundant, and I haven't succeeded yet. I don't know if any of you have seen that photo of the woman in her 90s with a placard that says, "I still can't believe I have to protest this, bleep, bleep, bleep." I'm still here with my placard, you know, the equivalent. I'm still here with my placard because we still have work to do. But yeah, I ultimately, idealistically, I would love to be able to spend more time in my garden knowing that the system is working the way that it needs to, in a fair, resilient way that captures everybody's needs and responds, you know, in a fair and compassionate way. We are, despite the optimism in this room, we are so far away from that. We are so far away from that, so I'm still here with my placard. But yes, do I want to be redundant? Yes, please.
Can I just ask a follow-up question on that, Amy? So you've been in this game for a long time. You played, you've been at the forefront of B Corp movement as well. So ultimately, has the last 2 decades, plus the growth of impact, has it actually strengthened the system or indeed diluted it?
No, I mean, I think it's strengthened it in quite a few ways. The system, we always talk about it like it's some kind of, you know, matrix, and we're all Neo, yeah. But
feels like that.
It does feel like that sometimes. The system, if we just use that as a shorthand, is certainly more comfortable asking uncomfortable questions. And I think I've really noticed that over the last 10 years. So this notion of ownership versus stewardship. Governance, how do we really govern, for example, AI? This isn't a regulatory issue, it's not a markets issue, it's a civilizational issue. So how do we govern it? It's getting much better at, really sitting with these deeply uncomfortable questions. It's not necessarily coming up with the answers yet. We've definitely got more inquiry. The actuaries, the accountants are now weighing in on things like fiduciary duty, GEFI. We've seen a lot more inquiry coming in. We've got more disclosure. Question, is more disclosure a good thing? Are we asking the right questions? Are we using the data in the right way? But we've got more disclosure. We've got more ideas now proliferating. So steward ownership, non-proliferation treaties. We talk about that with fossil fuels. Wouldn't it be interesting if we talk about non-proliferation when it comes to AI? As well, so there's an interesting one there. Nature on boards, the role of boards. more collaboration. There's an awful lot that has happened, I think, in the last decade. But the reality of it is the economies that in many ways are supposed to be leading the transition appear to be fraying politically, culturally, socially. That's a big concern. And it was confirmed in November last year that we've now gone through the 7th planetary boundary. We've only got 9. And it's highly likely we will remain in breach territory well past 2050. So, we are making progress. Are we making enough of the right type of progress? Big question mark.
We had a couple of hands up there, so there's a question there, if I can take that one, and then there's a question there, I'll take that after. Yeah.
Okay, Bond Pacific.
Yeah, no, go ahead, please.
Bond Pacific Exchange from Hong Kong. I do research in green finance. I really like Omar's first question about definition of impact. I want to take a step further. Do you think there should be a standardized definition for impact? Because like for green and transition, the market hopes to harmonize the definition and it's like disclosure. But for impact, for me, it's something different. But like I want to ask panelists, do you think it should be standardized?
Okay, standardization, and there's a question there as well.
Hi, I'm Sherilyn. I'm from Just Transition Finance Lab from London School of Economics. So I think there's a great positive outcome from the discussion, increasing take-up on transition finance. I want to hear from the impact perspective because how do you think about whether it's a global standard or your own transition finance frameworks? How do we think about impact on people? Like how do we ensure that, for example, the transition products and services are accessible, affordable, and that these initiatives are creating jobs at scale? So it's basically a bit outside of the immediate customer or client of the financial institutions. How do we think about it?
Okay, got it, lovely. 2 questions there, definitional, standardization, and the people and society at large. Who would like to take that?
Just make a start, and then the others, the questions are very good ones, because we see a lot of, so we have KPIs that we're always going to companies to try and get more data on. So for instance, if you're a healthcare company, we want to know the number of people reached with certain healthcare services who may not have had healthcare access before, or even not that detailed, just the number of facilities that have been built with this type of therapy, for instance. So we do find that across us and other managers, we can often go to companies with very similar, let's say we have a healthcare investment, and we might have it in an impact fund. Maybe the KPIs are very similar, but slightly different even. So if you think about from an impact perspective, it would be very useful, I think, to harmonize some of the metrics that we're going to companies with to make it easier on them to come up with sort of more standardized impact metrics for investors like us who tend to go to them and maybe have slightly different nuanced requests, but it just really does, I think, help on the reporting side. And I think that was my
and then just following up on that, so you talk, obviously standardization, definitional standardization leads to scale, it's one of the key enablers, but from a scaling impact perspective, does that have any tension points with diluting the integrity of the impact?
I think as long as your process as an investor starts with scale, in my view, if they're not necessarily in opposition, in terms of impact and scale. What's important is that the intentionality is clear up front. What is the fund or the investor trying to achieve? And how does that go through end-to-end its investment process, from screening to final investment decision-making, to then engaging with the companies, to then how do they decide when to continue to invest in the company if certain things don't manifest as impact? It has to go really from end to end. And in my view, that can either go through a green bond, it can go through a non-GSS bond, it can go through even an equity, but it has to be inherent in that process end to end. If you start to move away from that, that's where you can then have maybe mission creep.
Yeah, because it's interesting, I've always heard impact investing, the definition of direct investing, high impact, but the large, $100 multi-billion-dollar institutions, asset managers, it's just too small, can't invest in it, and then trying to aggregate them up isn't that easy, sounds good in theory, and then achieving that scale becomes challenging. Of course, you take it from the capital market, so it's slightly different. In terms of people and community though, Levine, I know you do a lot of work in Africa. And you've often commented on that, have you listened to the people? Is that something you could expand on?
Yeah, sure. I think when it comes to scale, I think one of the most important things is to look at the foundation first. Let me give you an example. So one of the things that I did previously was the creation of Zambia's first cancer hospital back in 2007. And the normal thing was just to say, okay, they got a loan from the government, they got from other institutions to say, okay, let's just deliver the hospital and start treating patients. But the idea was to say, do we want to make this sustainable? I didn't mean sustainable in an environmental case, but sustainable for investment for the country. We said, what can we do? So we said, let's build the human resources capacity within the country first and foremost, because, for example, cancer is a global problem. And what would happen if you don't build the capacity within the country X can easily come in and basically poach the doctors. They can work anywhere in the world. So what we did was to build a critical mass of foundation in the country before we scale to have 2 or 3 cancer centers. For example, the countries need like at least 5 to 6 cancer centers, but without a proper foundation in place, where you're actually creating also jobs, for example. I think when we spoke last time in Dubai, I talked about the Sukuk in Nigeria, where that was focusing a lot more on the dignity aspect, looking at, for example, building roads that can lead to easy access for schools and for hospitals. Because without things like roads, if you don't invest in that, of course, then the investment can go on to basically toll gates. But you're looking at a different way of repurposing your investment. Going back to what was mentioned earlier on about, just transition, for example, looking at who are you actually working with? Does the community, how are you going to benefit the community rather than all these different things people are signing off on? You can easily deploy the capital, and I've seen that at a much smaller scale. But then I think sometimes we have to look at the micro problems first before we scale up to billions and trillions, for example, and look at how we're working with the communities first and foremost.
Great, thank you. Well, look, I'm very conscious we are running out of time and we need to move on to the next panel. So I'm going to leave was there another question that I missed? No, that's fine. Amy, I'm going to leave the last word with you, if you don't mind. Because you have spent so many decades in this industry and you're going through your own transition now and rethinking where this is moved.
Yeah, I was actually just going to come back on those 2 questions because I think standardisation from a principles point of view is absolutely where we should be going, but we have to be really, really mindful that what good looks like in Spain looks completely different to what good looks like in India. And the one thing that we're really not doing enough of at the moment is taking into account threshold and contexts. So we're aggregating to global scores and then going, yippee, look at our global scores within our funds, this is a fantastic opportunity for us, without recognising that in that are some significantly embedded trade-offs, and we have to be able to measure those and look at the materiality of them in situ relative to threshold. And that, I think, is the next kind of frontier within the impact investing world. And I was going to pick up on something earlier, actually. This comes to your really great question there about how we do it with people, and to mean what you were just saying as well, rather than what we're currently doing, which is doing it to people. And the role of the boards here are really important, not just as an effective governance against, the mismanagement of risk, but actually in getting the right level of information into a company so that it can respond and adapt accordingly. And I mentioned earlier we have, this new, emergent now, push to get nature on boards. But the one thing I haven't heard a lot of today, I've heard it kind of come up in bits and bobs, is this notion of stakeholder aligned governance and stakeholder engagement. And it's kind of seen in many ways through my experience of dealing with, a lot of, businesses on phone calls. Do you have a stakeholder engagement policy? Yes. Okay, explain to me what you're doing with that. Oh, well, we might have a couple of surveys, or we might have, a focus group during the day. That's not great. What we mean here is how are you inviting in the wisdom and the voices from the communities within which you live, work and play, the communities that you impact. How are you inviting those into the strategic decision making within the heart of the business? And there is no better way to do that than to have those people represented on your board. And I think that is a big opportunity for the next decade as we go forward, is in democratizing our boards and getting better voices and better experience on our boards. And also recognizing, boards are there to serve. I'm just going to focus on that word for a little bit, to serve. You serve on a board. We've heard fairness, compassion, we've heard everything today, but we haven't heard anything about the the currency of service. And I think when we're talking about boards, service is the one area that we really need to focus on.
Thank you very much, Amy. Leadership to service, I think you're absolutely right. If you could all just join me in giving a warm round of applause.